Good evening. It is Monday, December 16th. It is almost Christmas. I cannot believe it is next week and the following week after that. It is going to be a new year. Wanted to talk real quick before we jump into today's GameStop option flow video. I posted a giveaway, just something wanted to give back this year, and decided to gift a few Unusual Whales subscriptions. So the way I'm going to do it, basically just pick random followers and random X subscribers. So I'll give you a little tip here. I know it sounds kind of cheesy to say, hey, subscribe to my X, but there's less subscribers than followers. Maybe you have a better chance of winning for what it's worth, because I'm going to pick from the regular followers, then I'm also going to pick from the X subscribers. That way everybody has a fair chance, and then you can start off 2025 with a bang, and you might just be the lucky person who wins a little bit of Unusual Whales service there, a little subscription. So something I just wanted to talk about. It is on my X page there. If you could just like and repost and follow, and all that usual stuff everybody says, but that would be great. But yes, let's dig into it. We'll peek also at the chart and take a look at some of those levels, as we saw today's low of day right at that year-to-date volume weighted average price, or VWAP, that we've been talking about. So let's take a look at some of this here, because today with GameStop, it was just chill. There was a little bit of activity this afternoon, and we'll get into that with some of the specific options. But then here about this afternoon, especially in the power hour around 2:30, about a half hour into the close, net call premium kind of took a big spike there from about 800,000 to close out about 3.8 million net call premium. So not a bad day in that regard. So we look up here, total premium was 30 million today. Net premium 4.5, and then like I said, that derived from that net call premium. So let me zoom this in. You're welcome to pause the video, take a screenshot if you like. That way you can go back and take a look and compare that these numbers here to tomorrow, because we'll want to check out the open interest updates. It's going to be very important. So take a look at those tomorrow morning when they're updated, especially when we see some of these higher volume activity. So we'll talk about that as well. For example, let's talk about that one. That is what got the buzz. I saw it all across X today. So we talked about, I think last week during the video, right before earnings, we talked about some different options. And, there's a lot of people out there that will sell calls during moments of volatility and hope that the price will, stay flat or go down. And then they'll capture the premium, and then they rinse and repeat. They'll use that premium to take other trades, add GameStop shares or what have you. It's a similar situation. People do it with AMC as well. I know it's not as well received, but for example, when AMC was 420, you have stock, you can sell calls against it. The price did come down under 4, so that was an opportunity there for current AMC shareholders. But nonetheless, let's talk about this here. So I'm going to zoom out here, or zoom back in on the 125 calls that we saw today. We saw this spike of volume right here into the close. It was about 10 minutes into the close. 3 million on that premium right there, and then later about another 650. So if we combine these into just like the last 10 minutes here, we can really take a look. It's about 3.8 mil total premium. Now daily premium here was 4.8 mil total. So that's going to be buying and selling. Now if you look here, ask volume today, 41,000. Bid volume 19,000, so almost 20,000. So what we try to assume in that regard, if the bid, which is going to be the lower price, you would assume that's being sold at that price, and then the ask, you would assume that it's being bought. It's not necessarily doesn't happen all the time, as contract trades do change hands. Sometimes you get a good fill. For example, I was selling calls last week, and I got a good price. So what it looks like on the option flow is that it looks like it was at the ask and bought, just due to the price and being filled in relation to where the price and the ask at the time. But the reality was I sold that call. I sold it to open. So that's always just something to keep in mind with the flow. So albeit though, today there was, like I said, 64,000 total volume. So we're going to want to check the open interest update in the morning. So make sure you check my page. I'll post those updates in the morning, because there was 75,000 open interest currently existed. So I'm not sure, if a trader bought these to close out anything. I'm not sure. Could be a trader setting up for volatility. As you see the IV here, we're looking in this column, it's kind of been 230, 240%, did spike today with those calls. So I don't really see, you see a bid 120,000, ask 130,000. This is over the last 30 days. So there's not really anything that jumps out. It could have been anybody selling a bunch of these calls right up here. and then bought them back. I mean, that's a very, very possibility. Because, for example, he would sell them, they're out of the money, and now maybe bought them back. These could also be somebody buying, for example, because let's look here. It was kind of wild because the low on these, I believe, was pretty low. Yeah, some of these fills this morning on those calls were only $20. And then they moved up after some of that initial volume earlier we saw this afternoon, and then before that big spike there. And some of those fills were at 91. And then 111 was the average fill into the close. So I mean, there's quite a bit of move, almost a 400% move, and those are 325% out of the money. So, for example, let's say that, this isn't buying or selling recommendations, it's just giving you an idea of what could be happening here. So you see here in that candle, bid 9,600. Maybe somebody sold 10,000 of those. That's a possibility. So, for example, let's say I owned 100 shares of GameStop at whatever you want, $25, $30, $20. I think I own my shares around, I don't really want to say. Very low, very low. I was here in 2021, so and the April dip, was like $10. So 10, 11, I don't know, 9, $8, somewhere around there. But nonetheless, so say if I wanted to sell one of these calls today, I could have sold that, captured $100 in premium. Now, is GameStop going to close above 125 or go above $125 before January 17th? I don't know. Nobody knows. But if it doesn't, I would just basically keep that premium as that call would expire worthless. So, for example, if it did go over to 125 and my shares were called away, I wouldn't have a problem selling them at 125 each. So, for example, if you sell a call, you basically have that obligation to sell your shares at that strike price if the buyer on the other end of your call exercises. So keep that in mind, something. But also there were people that were buying these and then probably sold them on the pop. There's people that are selling these to open in hopes that GameStop doesn't go above 125. There's some that are buying in hopes that people like me will post about it or we'll make a video, and then that induces buying, which will spike IV and further spike the price of the contract as well. So we look at that option volume today. I zoom this out here on the 1 minute. You can see where that really started to kick off into power hour, and then there was the real big sender right there. So in that 1 minute candle, there was about 2.6 mil in total premium from at 2:54 Central Time, so 3:54. So right before the market closed, that was your largest, and that's what spiked the price. And we'll take a look at the chart as well on that. So we're definitely going to look at the open interest, see what we can kind of decipher from that in terms of where a lot of those bought, where a lot sold. I mean, I could say you would maybe want to safely say 20,000 were sold and 40,000 bought, but it's always good to look at that open interest. And these things can change hands, so that wouldn't be necessarily the exact figure either in that regard. So some of the other higher volumes today saw the $30 calls for this week, and then the 60s, which I wanted to talk about too. The reason for that, these are new to the option chain, the 60s for December 27th for next week. But they did start to see some activity today. There was some bid volume around 3,000, but a little bit larger on the ask side. And these were alerted this morning, or right shortly after lunch, on unusual whales, about $13 a piece. I know it's kind of like out of the deep out of the money on a short dated call, but they did move to 29, so they kind of doubled there. The high of 50 and a low of 9. But what was interesting is the volume of 14,000 compared to only 800 open interest. So I want to take a look at the open interest on that again tomorrow. Wasn't a whole lot of premium, 308,000. In comparison to 30 million total premium. Isn't a lot, but it was something that kind of jumps out only because that volume was greater than open interest on a new chain. So, for example, if you were selling those calls, I mean, you could sell those. If it goes to 60 next week, your shares would be called away. I'm not saying it would. I'm just telling you kind of what would happen in that regard. We look at actual volatility here. We had earnings last week, and they did basically state at the end of earnings, that they do not anticipate any future offerings this year. Now, to me, I took that as we don't anticipate any this year unless something pops. But I felt more like we don't anticipate any of this more this year. Therefore, maybe some volume can come in, some options can come in, volatility can increase. Then maybe you see an offering again from GameStop next year. Not sure. I mean, they got $4.6 billion in cash according to their last financial statements. I'm not sure. The direction. I just follow the price, follow the volume. follow the option flow, and then you take the information they give you, and that's about all you can do. But if we look here in the column here for volatility leading up to earnings, and then it kind of calmed down a little bit last week into the close Friday, and then bought back up to 107. So 107% on the IV with implied move of like 9%. So interesting there, but I like seeing that net premium positive because if we zoom out in the last, I think in the week, this might be the largest, net call premium in the last week. Could be the last 14 days as well. It doesn't necessarily mean it's bullish or bearish. Just means there's some excitement again in regards to options in the stock. So yeah, if we go back historically, today, it's about a 2 week high. So net premium pretty decent. If you look like the 7-day here, even when price was up there post earnings, still wasn't a lot of call volume there. Did see a taper off into the close of last week, Thursday and Friday, and then today, boom, like right back into it. So, yeah, but let's take a look at actually where that money was spent. We'll use our trusty unusual whales. We'll pull up the hottest contracts. Make sure we've got today's dates selected here. And these are sorted by premium, so highest premium here. We'll look in this column. And the highest one, like I said, it was centered around those 125 calls that we already talked about. The $30 calls for January 17th and the 30s for this week. So let's take a look at the 30s for January 17th. Did see some of that bid activity come into the close there. Could be them, somebody selling, could be buying, it could be both. So you always want to look at that. About 1.4 mil total premium, 5,000 volume. So we'll take a look. Open interest, 34,000. Not a whole lot going on, but like I said, it was the top three option where the total premium was at. So it could be traders betting on the idea of GameStop moving up, which in this regard, for example, those contracts were 240, about 250 this morning, and did some fills around 360. So those moved up about $100 into the close as GameStop moved up again. And then the 30s for this week were also on there. But if you note here, there was 21,000 OI volume higher than open interest today. So again, we'll take a look at that open interest update tomorrow. 1.4 mil total premium, and some of that came in right at the close. So let me put the 10-minute on, so we can take a look at some of those premiums there. About 215,000, and then 600. So about half of that, a little over half of that premium for that $30 call for this week came into the close, which got alerted for volume larger than open interest. But those were filling this morning. I saw around $30 and did a 4x spike to 120. So that IV, though, you can see it jumped 83% on Friday, 129% today. So when you get a little bit of volume and the price moves, the IV will go, and so will the premium, which also on short dated calls, make sure you're the one buying here and taking profits here. Don't always buy up here and then wonder why it fell back down and expired worthless. I've talked about it too many times. I know you're all very intelligent traders. Protect those gains. If you see money on a contract, I'm not saying immediately sell, but I see too often where people buy at the top on out of the money short dated calls, and then they get faded on Friday, and they're like, what happened? Well, it was very easy. It wasn't that you didn't buy the right, you just didn't buy the right way, at the wrong time on short dated, out of the money, high IV. It's a tough environment, so you have to be very cautious there. $28 calls for this week in the money. Maybe some traders bought those earlier in the day at $75. You could easily take profit at 160 and then again at 200. So a nice intraday trade on those $28 calls. Because volume was double than open interest and about a mil total premium. So we'll take a look at open interest tomorrow on these to make sure you look at that for the updates. You can zoom in here and take a look at the others that were on there today. Like there were $40 calls for January, which again, they were bought induced there at the top. Considering those were only trading earlier at 130, and then you see buyers jump in at 200. It happens. I understand FOMO is real. But when that IV spikes, you got to be careful, because if the price moves down, boom, these contracts are going to move right back down. So be careful. Be very cautious. I talk about it often just because I want to see others lose less and win more. That's the idea. And then let's see, some 125 calls for January 2026. This is a whole year out. About $500,000 total premium there. So not sure the strategy there, but hey, somebody's adding to it because OIs slowly increase daily. And these are out of the money. A lot of people sell them because it's to them they think it's free premium and risk free, and that they don't mind letting their shares go at 125 if there was, a squeeze or something moved up. I'm not saying there would be. I'm just saying in the event that happened, somebody who owns shares at GameStop wouldn't have a problem letting them go at 125. And if you do, I'm not sure what's wrong with you in that regard. And then the 30s for next week also. About half a mil total premium there. A little bit of volume compared to OI, kind of right about that. So, but again, a mix between buyers and sellers. So you always want to compare bid and ask. You can't just say, oh, 500,000 into $30 calls for next week. That's bullish. Not necessarily. I could be selling $30 calls hoping that GameStop closes right under 30 and I keep all of that premium. In this case, say I sold one this afternoon at the close at 175. As long as GameStop doesn't close above 30 next week, that's my $175 to keep. And then come next week, that contract closes, expires worthless if it did, and I would keep that premium. So there's always opportunity in the market. That's why I always encourage education. I think it's important. And then 125s for the summer, same story. It's like as soon as everybody posted, hey, look at these 125s getting loaded, boom, it comes out. So, and also be careful with that, because I see many times where you'll have different like Discord rooms, things on X. I'm not saying coordinated buying, but somebody might have an idea and they share it with a lot of people, and those a lot of people jump on the same idea. Do you get what I'm saying? Are you picking up what I'm laying down? So it's like coordinated buying and then an attempt to move up. You may not know when someone's exiting, and then you're the exit liquidity as you're buying into the FOMO. So be careful. Please be careful out there. But let's take a look real quick, and then we'll look over at the chart as we wrap up. So I wanted to jump back, take a look at how some of that gamma, because it's always been the thing. Before we were at 25, it was the $25 level. And then through the basically share offerings, the book value of GameStop's increased. And now that gamma started pushing that $30 level before we were at there. And you can see every time it gets around 30, it gets a little more volatile, it gets sold off, gets bought, it gets exciting. So again, there it is, your spot gamma right there at the $30 level. It's the highest, which it's been for the last few weeks. Basically, in short and sweet, the closer that moves to 30, more of those calls become in the money. The ones over 30, if it moves above 30, they then become in the money. So it's kind of like a snowball effect. So market makers that have shares against these positions, against the calls and puts they've bought and sold, then have to readjust their positions. So if a bunch of people buy calls, they'll then sell you the calls and buy a bunch of shares to hedge against them. If you sell all your calls, then they will sell the shares. So that's why you see upside with price and then volume. And then when those, like if a bunch of calls come in, you'll see volume actually on the stock chart. And I'll show you that here in a second. And then we see like call selling, put buying, etc. You'll see like some of that downside pressure from the selling of those shares. Where that derives from, we've talked about this before, is the spot gamma. And you're welcome to pause right here, take a screenshot. Because spot gamma exposure, it's the assumed dollar value of gamma exposure the market makers need to hedge per 1% change in the stock price. So positive value is long gamma, negative value is short gamma. So you're welcome to screenshot this, pause it so you have it. I've talked about it in the past. So you can see it gets a little dicey as it gets closer to 30. And then we take a look at that gamma. I assume most net gamma, again, right at the 30 as I expected. I'm sure there's gamma there at 28, 20, but 30, like above 30, and it starts moving a little bit like you've seen. It gets a little more volatile. And that's the name of the game if that's what you're after. And then net gamma centered around the January 17th expired at the highest, and then this week. Typically with GameStop, it's like week in and week out is the highest next week in net gamma, and then usually 1 month out would be the next one. In this case, it's January 17th. So could be, like I said, looking at because GameStop said, hey, we don't anticipate diluting any more shares or selling more shares, then they may be expecting to move up, and they may be expecting to sell more shares in January, February. I'm not sure. You just take it day by day. So with that exposure, like I said, let's take a look also at that delta. Again, same scenario. But see, a 25 has like always been strong there with net delta and 20. And then now 30, and then up there at 40 and 35. So yeah, like I said, above 30 is 35 and 40. Now, do you get there? I don't know. Nobody has a magic 8 ball. And if anyone's telling you they do, don't listen to them. But yeah, that was just something else I wanted to talk about before we jump over into that chart. Look at that magnificent chart. Some of the levels, and there we go again. Come over here to the left. That year-to-date VWAP today, the low. Let's see, today's update is 27.29, and then today's low is 27.27. See, before, over the summer, we had talked about that VWAP because it came into play right after the offerings, and we talked about, oh, there it is, and it served as a port, as an area where it rejected. So it was resistance. The summer came, and as we moved closer and closer, GameStop's got money. GameStop said, hey, we're making a little bit of money on our earnings. And this was a great, we talked about this at the end of October, that 921 EMA crossover building on higher volume. If it continued through, there was your cross. So if we look at that here, because I know we talked about that, I know we posted it in video as well. So if you get that continued breakthrough, which we saw, let's take a look here. Close on the 28th at 2275. So let's go to that 2275, just so we can see for idea, on that breakout there, up to today. Not a bad 921 EMA cross on a daily, 30%. Not bad, about $7. I know, right? Sometimes these things work. I know. So as we watched it, though, we saw volume. It's like a election, and then boom. Was this going to be the range we talked about in the older videos? Then we moved up. Then the year-to-date VWAP became really into play. Then it started serving as an area of support, which became exciting because this is basically the average price all year from January 1, the volume-weighted average price all the way back to the beginning of the year. Let's look at it. For those that doubt, when in doubt, always zoom out. I know. Look at it. Let's see, 2024, all the way back. January 1. Here we go. Closed 1666, stocks 2944. It's like doubled almost. Not a bad run. Not a bad run. I know, I'm excited about it too. Always have been. But we look at some of those levels today. We see this high today. We're retesting, getting near some of those previous highs where we saw those higher wicks. But today we have this larger body on the candle, which is cool. Doesn't always necessarily mean anything, but it can with higher volume and especially, and accompanying options volume and net premium, which we saw today. Could introduce, like I talked about last week, when we talked about earnings, the implied move was around 12%. It was 12% up or down. And on that day, if we flip to extended hour data, there it was, right there. Right here was the following earnings. So there we saw the high there of 31, which touched that level we talked about, and then the low 25.67 right down there to this previous low when we're using extended hour data. So that's where that had come from there in that regard. So that following day last week we opened up past earnings. You saw that high of 30.16, and then today's high 29.59. So, but I did see in after hours we were moving up a little bit. So let me take off the daily, because I thought we did move up a little bit on that after hours, which we did here a little bit. There's into the close, 29.48. Okay, strong. Nice volume into the close. And that's what I wanted to talk about, because that's what accompanied as you saw those options come in and people with flow were posting about them. We can take a look at that volume here. Let me get back to regular trading. See how that started to pick up? I'm on the 2-minute now. You can see that volume really started to pick up there as GameStop moved. And that was quite a move. As it was just kind of like establishing, we got a nice, it doesn't count much on a 2-minute, but if you wanted to go from like the 921 cross again, which I use that often, I'm not going to lie. That's a 5% move, $1.40. So not bad. Not bad in that regard. Depending on what you were achieving there. So did move up and you saw that volume. So kind of interesting to see that. And then also going back to that daily, I want to zoom out even further. And look at that weekly. So once you look at the candle that we're starting to print this week, I think it's important only because of the size of the body of the candle. A little engulfing compared to the week before, especially when you think of the body. So we just want to see continued volume, continued follow through. Nobody knows exactly what's going to happen, but not bad consolidating up here, especially above the year to date when using the weekly at 2687. And then I wanted to look at that monthly as well, just to see how December's shaping up. I know the chart looks funny. It looks funny with that May candle and that mega wick, only because the high was 64.82. Wasn't that wild? It really was, too. And we were so ahead of it. Remember when we caught that flow in late April, early May, when I think the stock was like 17 bucks or 12 bucks or something, and we were looking at like $17 out of the money calls, and from there we saw Roaring Kitty, and man, did we make some money on those call options. But yeah, so see, here's the monthly. So we'll take a look. But like I said, I like that weekly, and I like the daily. I just like seeing it above the VWAP. So I think it's strong. So we look at other levels today. If you look in your top left corner, 9-day 28.47, and the 21-day EMA at 27.78. So with today's close, 29.44 above those, not bad, and higher volume. So even on these lower volume days of consolidation, in between green, higher volume candles, not bad. Anything above this is good. That's kind of the number. Below it moves back, above it moves down. But there's 4.6 billion in cash and positive earnings this quarter. Not sure how Q4 will look when we see earnings next year, February when they report for quarter four, but it'll be something to look at in that regard. So I know we talked a lot, but if you watched it all the way through, you're awesome for that, and it tells me you want to learn. So comment, reply to this Christmas giveaway. Make sure you check out that giveaway. Also, if you want to, please subscribe on X. That's awesome. If you don't, no worry. Just do what it says here. Because I'll make sure that you reposted, you liked, and you follow. Why? Because it's not hard to do a couple things in exchange for some free stuff. And this is not sponsored by Unusual Whales. This is on me. This is on my pocketbook. It has nothing to do with them, other than I'm a partner with them. I love them. I use them, and I'm gifting subscriptions to their platform. So the giveaway has nothing to do with them other than that. It's hosted by me. So, but yeah, that is what I got for you today. We'll take a look at it, and we'll continue tracking the options into the rest of the year, into next month, as we set up for the January OPEX. Like I said, traders could be betting on volatility, could be betting on an upward move. We did see a Roaring Kitty post. We still don't know what all that means. And only time will tell. Maybe we'll see a portfolio update on Reddit. You never know, because he's very random and methodical. But don't base your trading and your thesis and your ideas around the next time he'll post. Always have your plan. Trade your risk. Trade your plan. Manage your risk. And just be careful out there. But always have a good time. Like I said, I didn't want to take too much, but I already did. So hopefully you have time to watch this, digest it, go back and forth, send me a DM, reply, Christmas giveaway down below. I'll know you watched it all the way through. And if you got questions, send me a DM or what have you. And yeah, we'll see you tomorrow in the next post. Everybody have a good night. Thank you.